Hello everyone and welcome back to my channel. Today I will show you my silver trade that I took on my live AMP account. First, let's look at why I took the trade. If you watched my last video, you know that I demanded a certain condition is present in the marketplace before I look for a trade setup. That condition is the higher time frame bias. I determined the higher time frame bias with the help of seasonal tendencies, as well as the commitment of traders report and open interest. We see that silver has a bullish seasonal tendency in the beginning of the year, beginning in the middle of January and ending in the last portion of February. That means that if monthly, weekly and/or daily chart have bullish institutional order flow, we can look for a bullish pattern to trade from. This is the weekly chart of the silver's March futures contract. The blue shaded box is the weekly fair value gap. We can see that price has spent a lot of time in the weekly BC. It is important to note how bodies of the candles have respected the low of the weekly fair value gap. After that, we get a large bullish candle in the beginning of the year, followed by 2 weeks of consolidation. These are the 2 weeks of consolidation. Notice how bodies of the candle are closing around the upper quadrant of the weekly fair value gap, with their wicks reaching into the lower part of the weekly fair value gap. This is indicative that prices are respecting the weekly fair value gap and that we are likely to see price trade higher. After that, we get a large bullish candle, closing well above the fair value gap. We don't want to see price trade back into the BC, but we would like to see an immediate rebalance, as that is one of the strongest signatures in price action. After the immediate rebalance, we can now anticipate price to trade into the weekly buy-side liquidity pool. And remember, we don't need to see it trade there to be profitable. This is the daily chart. We can see that we get the immediate rebalance on Monday. We get an amazing response from that level, but for this video we will focus on Friday. This is the close-up of the daily chart. We can see that we take out the Tuesday low on Thursday and close well above the mean threshold of the daily bullish order block. This means we can expect bullish prices on Friday. Low-hanging fruit target for Friday's trading is Thursday's high. This is the 4-hour chart. We can see how price took out Tuesday's low. Smart money accumulated longs there and they look to distribute their longs above previous day's highs. This is the 1-hour chart. Look at how bodies are respecting the new week opening gap low. Notice how price reaches down into the new week opening gap high and the mean threshold of the daily bullish order block, before exploding higher to take out previous day's high. This is the 30-minute chart. Notice the 30-minute bullish order block and a fair value gap. Now refine down to the 50-minute chart. This is the 5-minute chart. Notice how the bodies are respecting the new day opening gap. I took the trade on the 1-minute chart. Look at how the bodies are respecting the fair value gap low as well as the new day opening gap. Here is the trade. Entry was at 32.7110 and the stop loss was at 32.625. I took profit 1 tick below previous day's high for a risk reward of 2.35. For additional confidence, I look at correlated markets, in this case gold. We can see that silver was unwilling to make a lower low, where gold made it. That is SMT with gold, which gives us further confidence that higher prices are in order. I also compare it to the dollar index. I want to see dollar index declining, since that makes it easier for silver prices to rally. We also get SMT with the dollar index, and as dollar declines, silver rallies higher to take out Thursday's high. Here are the executions. This is the 5-minute chart. And this is where I took the trade on the 1-minute chart. Like I said at the beginning of the video, I took the trade with my live AMP account. Thank you for watching.